Let's get more on this market bounce. Patrick Horan joins us now, principal at Agilith Capital. Patrick, great to see you. What do you think? Is this a sucker rally, a dead cat bounce?
Do markets go lower? I think the U.S. market goes lower, and I think that's going to be weighed by growth stocks and the so-called American exceptionalism trade. I think the U.S. dollar goes down from here. I don't see interest rates or inflation going down very much from this point. So, I think we have kind of a sideways market to down, a lot of volatility. It's going to be hard to measure whether you're up or down over the next couple of months. Mm-hmm. I think we have to, in Canada, I think we have to get our elections behind us, so we can actually have a firm trade deal kind of renegotiated. But I do think the U.S. I think capital is leaving the U.S. and I think it's gone for a long time.
Yeah, you've been warning for quite a while that there was just too much euphoria over America, too much money going into their assets, into their currency, and you see this as a predictable correction to some extent?
I would even call it a bubble. And bubble in thinking, a massive groupthink, probably that we really haven't seen before in terms of the scale. This was something that the global capital markets got behind. So it is bigger than, say, the .com or the great financial crisis, and there's going to be a massive repositioning here, from our best guess, we've just started that journey. It's going to be long and painful, I think, from a capital market standpoint. And I think stuff that was winners over the past, over the past 10 years, are going to turn into losers or just non-performers.
You do, though, think the tariffs are partly, the massive scale of the tariffs is partly a negotiating tactic?
Yeah, I do. I think there's truth in both their desire to rebalance the trading system and as well to try to get better deals. I think when we think about Trump, he is a deal junkie at heart, and he will jump to things. And we know his center is heavily influenced by whims. So if we look at the playbook from when NAFTA was renegotiated when he was in office, there was quite a bit of hoopla and pressure and statements made that really were never fulfilled. And there was very little change from NAFTA to USMCA or CUMA, or whatever you want to call it. And so we kind of believe that we're kind of reliving that groundhog moment here. But having said that, this is in terms of Canada and Mexico anyway. They're playing hard. That's what you would expect. And but I do think I do think Canada is directionally going to be taking a different approach this time around.
Sorry, give us that again. What is your view on Canada? What should we be doing?
Well, I think it's clear that the rule of law and a contract, now that it's been broken, I don't think we're going to be gullible to re-sign it and actually expect it to hold. So I think Canada has to position itself as open for business to the rest of the world, and we have to be quite aggressive on that front and figure out our trading routes, figure out our ports, figure out our oil shipments, and we have to diversify away from the U.S. In the meantime, I think building a deal with the U.S. makes a lot of sense, and I'm hoping whoever we elect kind of pursues that. I think I think Canada ultimately in over the long term is in great shape because we're unified in our beliefs, unified in how we think about, trade, the U.S., taking down, artificial barriers provincially. Where the U.S. is just not unified, it's always a jump ball. And so therefore it's really hard to predict that outcome of what you're going to get in 4 years or even in 2 years if Congress changes. So that in itself will prevent capital from locking into any sort of long-term plan. And that's kind of the core of our belief of the differences of the two countries now.
You have been investing, you have been loading up in Canada over the past few years. You've been avoiding the US. Are you going to stick with that strategy?
Absolutely, absolutely. I think it'll be a while before we go back into the US. I think the US dollar is just on its way down to a level that kind of makes sense. It's still, from our estimates, about 15% overvalued, and there's going to be a lot of change. And I think these policies, the way in one sense I see the imbalances. The imbalances have been around for 15, 20 years at least, and they've only gotten bigger and bigger. And this is their attempt to correct those imbalances. The strategy behind them are really convoluted and open for interpretation. And it's going to be very difficult to actually form any sort of long-lasting relationship with the U.S. as a result of that. So I think they're in a period of influx for a number of years. There's a trade-off that they're making for all of the companies that have been built up on a global basis in the U.S. They're going to get torn down, or they're going to have to massively reposition, at least to serve the U.S. market. So we see that, and we look at it, and it's too chaotic to try to understand and to see where things are going next. So stability, direction, long-term strategy, those are things that are going to count, we believe, in the next couple of years. And I think that's where Canada falls nicely into.
Patrick, thank you very much indeed.
My pleasure. Good to be with you.